Your credit score, ranging from 300 to 850, is calculated from 5 factors. Payment history makes up 35% and is the most important. Even one missed payment can drop your score significantly. Credit utilization accounts for 30%. This is how much of your available credit you're using. Keeping it below 30% is good, but below 10% is ideal. Length of credit history makes up 15%. Older accounts help your score. Credit mix counts for 10%. Having a variety of account types like credit cards, auto loans, and mortgages shows you can handle different types of credit. New credit inquiries make up the final 10%. Too many hard inquiries in a short period can lower your score. Here are 5 actionable steps to improve your score fast. First, set up auto-pay on every account. 100% on-time payment history is non-negotiable. Second, pay down credit card balances to get utilization below 10%. If you can't pay in full, make payments twice a month to keep the reported balance low. Third, don't close old credit cards even if you're not using them. The age and available credit help your score. Fourth, ask for credit limit increases on existing cards. This lowers your utilization ratio without any additional spending. Fifth, check your credit reports for errors. Roughly 1 in 5 reports contain mistakes, and disputing errors can result in immediate score improvements. Building excellent credit is a marathon. The most important habit is consistent, on-time payments over years. Avoid opening too many accounts in a short period. Space out credit applications by at least 6 months. Consider becoming an authorized user on a family member's old, well-managed credit card to benefit from their history. For those with thin or damaged credit, a secured credit card is the best starting point. You deposit cash as collateral, use the card responsibly, and graduate to an unsecured card after 12 to 18 months of perfect payments. Remember, a credit score above 740 qualifies you for the best interest rates on mortgages, auto loans, and credit cards, saving you thousands over your lifetime. From 300 to 850 is calculated from 5 factors. Payment history makes up 35% and is the most important. Even one missed payment can drop your score significantly. Credit utilization accounts.